Today we are going to discuss some key market events in 2024 that you must know to manage your money and investments better. Hope you had a good time in December and are ready to make some gains in 2024. In this video, we look at the outlook for interest rates and inflation, the recovery of dividend stocks, the state of real estate, and the outlook for the energy sector in Canada. And finally, for my crypto folks, we'll also look at what to expect as the Bitcoin halving approaches. Let's begin. First up, let's look at what to expect from interest rates and inflation. As we all know, the trend over the last 2 years has been rising inflation and increasing interest rates. By now, we have all felt the pain quite a bit. The stock market experienced a downturn with growth stocks particularly smashed due to higher discounts applied to future earnings. For 2024, the expectation is that the central banks will start cutting rates as the inflation has been stabilizing. If this trend continues, we could see a rebound in markets that are sensitive to interest rates, such as real estate and equities that are yet to recover. All of us investors might see more stability in our portfolios. Historically, periods of high inflation followed by central bank interventions have often led to recessions. However, the current economic environment is unique due to the unprecedented nature of the pandemic and the subsequent recovery. While my base case is that we will return to lower interest rates and lower inflation, there is a risk that inflation could linger around a bit longer or worse, tick back up. This would require holding the interest rates where they are to stop the economy from overheating again. I have seen a lot of gains in my portfolio over 2023 as I was investing earlier in the year. Over the last 3 months, I've only taken profits because some of my positions were up 70 to 100%. I'm keeping some cash around in case we see some volatility return to the markets. In any case, I do not see things getting as bad as they did in 2022. Remember, there are no guarantees, so stay vigilant. But if things go our way, we should see some of our favorite growth stocks soaring to new highs. Next, let's look at what's happening with dividend stocks. Dividend stocks are a critical aspect of investing in the Canadian markets. They have also faced challenges over the last 2 years. Many investors shifted their focus to investing into assets that are traditionally considered hedges against inflation, such as commodities and GICs. And this has led to reduced demand for dividend-paying stocks. Why buy stocks when you can get guaranteed 5% and more on GICs? Even high-interest savings accounts are still offering interest up to 4%. With the anticipation for potential decrease in interest rates in 2024, dividend stocks should see some recovery. Investors always seek out income-generating assets in a low-interest rate environment. This could lead to a re-rating of dividend stocks, particularly those with strong fundamentals and a history of consistent dividend payments. These could include companies such as Enbridge, TELUS, and Manulife. They are already showing signs of recovery, just anticipating the rate cuts. Remember, markets are always forward-looking. You don't wait for the event, you always try to front-run the event. However, the recovery of these dividend stocks may be affected in case we see a recession or in case these companies face financial difficulties leading to dividend cuts. Some of the companies have really been pushing it on paying dividends even through bad times. I will keep adding to my positions without worrying too much about the macro as I'm holding them for the long run and they are mostly held in my retirement portfolio. Okay, now what's up with everyone's favorite topic in Canada, real estate? By the way, if you're enjoying the video so far, hit like and consider subscribing to my small channel. So I would like to start by saying that I do not own any property in Canada. I moved here in 2019 and I'm far from ownership. However, I do keep track of the real estate market as it reflects upon the broader market trends. The Canadian real estate market has experienced a cooling trend over the past 2 years. The Canadian Real Estate Association reported a 20% decline in properties changing hands by the end of 2022. The trend in 2023 has been rather mixed and the market is positioned to recover. For now, the home sales are below the 10-year monthly average. Rising interest rates and inflation have definitely made it even harder for Canadians to buy properties. The outlook for 2024 is cautiously optimistic. Some forecasters expect the housing market correction to end in 2024 with the price of a home in Canada predicted to rise by 5.5% year over year in the fourth quarter. This is all very uncertain right now and this will greatly depend on the rate cuts and whether or not we see a recession. In my opinion, even if we see a recession, it should be short-lived with minimum impacts on the housing market. Historically, the Canadian real estate market has always shown resilience in the face of changing macro, with home prices in major cities like Toronto and Vancouver rising rapidly through tough times. We all know the biggest problem in Canada is the rising cost of housing. Now it's time to look at the energy sector. Over the past 2 years, Canadian energy stocks have experienced mixed performance. Renewable energy stocks have been hit hard by rising interest rates as these companies often rely on high levels of borrowing, making their servicing costs more expensive. However, traditional energy companies such as Enbridge have shown resilience even with a lot of pressure. Looking ahead to 2024, the outlook for Canadian oil and gas industries looks favorable, with capital expenditures expected to grow by 10.5%. Companies like TC Energy are even forecasting higher earnings. However, the performance of energy stocks always greatly depends on the macro factors. While green energy stocks may continue facing challenges due to the high interest rates for a bit more, I am expecting companies like Enbridge and TC Energy to perform well in 2024. Again, investors should be front-running the changing market conditions. I have positioned myself for some recovery, however, I do not really like investing in this sector due to the unreliable nature of macro events. Enbridge has been a great hold, paying 7% dividends over the past few months, and it has barely moved in 6 months. If you have watched the video so far, here are 2 bonus events that will be important for Bitcoin and crypto investors out there: Bitcoin halving and the ETF approval in the US. The Bitcoin halving is a significant event in crypto and is expected to occur in April 2024. The next halving event will reduce the block reward to half, that is 3.125 Bitcoin. The last halving event occurred in 2020, which reduced the reward for mining a block from 12.5 to 6.25 Bitcoin. This event led to a significant increase in the price of Bitcoin, following a similar trend observed in previous halving events in 2012 and 2016. It is important to note that past performance is not a reliable indicator of future events. Bitcoin has matured greatly since 2020, with a lot of key participants getting involved. Remember, history doesn't repeat, but it can certainly rhyme. I'm being cautious in my buys right now, as I was buying in late 2022 and early 2023. Additionally, the expected approval of a Bitcoin ETF in the US could provide a more accessible way for investors to gain exposure to Bitcoin without having to buy and store Bitcoin directly. If all goes as expected, we should see massive inflow of funds come into Bitcoin, leading to much higher prices. Some of the big players in this field have already predicted some ridiculous prices. Do not blindly believe anything, and make sure you plan according to your financial situation. Remember to not give in to FOMO and hype no matter what happens in crypto. Remember, in crypto, 99% is just speculation. That's all for today's video, and remember, these are just predictions based on current market trends. Always do your own research and consider your financial goals and risk tolerance before making any investments. Thanks for watching, and always remember to keep learning and stay on top of your finances. Until next time.